Ever held on to a trade overnight? Well, you've probably already been hit by swaps. Some call them swaps, others rollovers, other carry trade, but they all mean the same thing. Unfortunately, not all traders understand what a swap is and how they can impact your trading strategy in both a negative and a positive way. Want to know how? Keep watching as I break down what a swap is. So guys, to kick things off, there are always going to be some costs involved when trading. This varies from broker to broker, but the most common are commission, the spread, and the swap. But swaps are not just costs, they can also be earnings. I'll circle back to this in just a minute. But first, to simply put it, a swap is basically the interest that you either earn or pay for a trade that you keep open overnight. There are two types of swaps, guys. Swap long, which is used for keeping long positions open, and swap short, which, as you can guess, is used when keeping short positions open overnight. And you will see this interest in pips per lot, which can vary depending on the financial instrument you're trading. With FXTM, you can see what swaps apply to which instrument on the contract specification page. The link to this page can be found in the video description. Another thing to keep in mind is knowing when your broker adds its swaps. A lot of brokers use the New York close 5 p.m. New York time, but this isn't the case right across the board. Most brokers, including FXTM, usually go between 11 p.m. to 12 a.m. GMT or CET depending on the region. So if you are holding a position overnight, you are likely to get charged. In some cases, you could actually make a profit for holding that position overnight. The most popular way to profit from swap rates is from the rollover or carry trade. For example, if you buy a currency with a high interest rate while selling a currency with a low interest rate, you will gain the net interest of the difference. Let me break this down for you. The main reason a currency's price moves up and down is because of interest rates, which can be impacted by various fundamental factors. For example, when you borrow money from the bank, you pay more if interest rates are high. Interest rates vary whether you are in the UK, Nigeria, or wherever you are in the world. This impacts the swap rate that brokers charge for holding the currency. To understand how swaps work, you need to understand what leverage is. Leverage is offered by brokers to maximize traders' buying power by giving them the ability to deposit a small amount of funds and trade larger volumes. So when trading using leverage, it's basically a loan from the broker. A trader receives interest on the currency that was bought and pays interest on the currency that was sold. As I said before, if you purchase a currency that has a higher level of interest than one being sold, this will result in a positive rollover. However, if you buy a currency that has a lower level of interest than the one being sold, this will result in a negative rollover. Essentially, the swap is the interest credit that you get into your account for holding a trade overnight. Now that you know how swaps work, let's have a look how to calculate it. Check it out. This is a standard formula that every broker uses, but don't worry, the broker will do the heavy lifting for you and calculate its overnight, but it's still useful to know. You can keep a Forex position open as long as you like. Forex traders who keep positions open for days or weeks are called swing traders. Those who keep positions open for months or even years are called position traders. However, if you close your position before the end of the trading day, known as the rollover point, you neither owe or earn any swap charge, which is referred to as day trading. If you want to learn more about the different types of traders, check out our video in the description. You can find the current swap rates in the MetaTrader platform, which are updated constantly to reflect the prices you'd be charged that night. Here's how you do it step by step. So there you have it. I hope this video has shed some light and cleared up exactly what swaps are and why they are important when trading the markets. A special shout out for Joel for making this video request. Tell us how we did. What topics should I talk about in my next video? Let me know in the comment section. Please remember to like, share, and ring the bell. Until next time, thank you.